All right, Greg, we are live. Myrtle
All
Beach
right.
Real Estate TV. Yeah.
Hey, everybody. Greg Harrelson here with Century 21, the Harrelson Group, with my co-host and partner, Abe Safa. Also, with agent with Century 21, the Harrelson Group. Just wanted to bring another episode or another conversation to you about Myrtle Beach Real Estate and give you an idea of what's going on. Abe, I know you've got some numbers, but before we dive into those numbers, you and I were just briefly talking. About how not agents, but buyers are starting to question whether or not they should continue to, to pay high number, or higher prices. Meaning, if a property's priced at say $300,000 and they got multiple offers, and they're, at one point we were getting them to, or buyers were willing to say maybe go $30,000 to $40,000 over full price. Right now, we're starting to have buyers are kind of questioning whether or not they need to be paying those prices, or if they should wait a little bit longer. Anything else? Are you seeing anything else in the any kind of shifts in the way sellers are handling the transactions, or buyers?
Yeah, I am. Like, I don't know, a month ago, a month and a half ago, we were getting ridiculous offers from buyers. So buyers are willing to do anything. They kind of got sucked into the drama of, look, there's no homes out there. You got to come in really aggressive. I mean, I'll give you an example. I had a listing where it was a $450,000 listing, and we had an offer where the buyer came in above asking price, and they were willing to pay $50,000 above whatever the appraisal came in at. So
Mm-hmm.
they say, okay, even if it doesn't appraise, we're willing to go as much as $50,000 above asking price. So those are the kind of offers that we were seeing about a month and a half ago. Back to your point, I'm in total agreement. We're not seeing as many of those anymore. So are the buyers coming to their senses? Are they saying, okay, enough's enough, and look, I want to buy a property, but I'm not gonna, give away everything. I think buyers are starting to come to their senses more and
Yeah.
more each day. Now the challenge is, I don't know if sellers are aware yet, right? So sellers still think that, okay, yeah, no, we can ask for the whole world. And frankly, I'm seeing some sellers right now make some not as good of a decision, passing up on offers that are really good, thinking, okay, well, no, that, I know the market's super high right now. We'll just wait for the next offer to come in if they don't get everything that they want.
Mm-hmm. Yeah, so I've seen similar things, and the reality is we can get a seller right now. We can still get them a very high price. I
Oh
mean,
yeah.
we are selling properties at really high prices right now. Um, but we, but just like you said, let's just say that the property is really worth 300,000 based on some comparable sales, and we decide we're going to list it for 329,000, list it for like $30,000 more. Yeah, we can still do things like that and still probably get it sold. But some sellers are saying, well, if it was 300, let's go to 350. Sometimes they're getting a little bit too confident. And then that's the type of property that is sitting on the market. So you can overprice in today's market. But at the same token, you can still get a really, really high price in today's market. But I've also, another thing that I've had is where, at one point not long ago, if the property appraised lower than the contract price, a lot of buyers are willing to make up the difference and pay the extra money just to get the property. I have had a few properties fall through recently that they did not appraise, and the buyers are like, no, if the sellers are not going to come down, we're not going to go through it. And then the sellers, and maybe this is kind of what you're alluding to, and the sellers would say, no, we'll just wait for the next buyer. But the next buyer is kind of like the last buyer. They're starting to say, well, maybe appraisal does matter, and maybe it's too risky to be disregarding the appraisal. So we're going to have to just keep our eyes on this and see where this takes us. But what I want everyone to know is that Abe and I are looking at the data, and we're reporting on a weekly basis what we're experiencing in the field. We're actively helping buyers and sellers every day. And these are the conversations that we want to give back to you so you can make really good business decisions in respects to your real estate holdings. Hey, why don't you talk to us about some numbers? Because I'm interested. It seems like in the last week or so, maybe 2 weeks ago, we looked at some numbers and it didn't seem to be getting better, didn't seem to be getting worse at any level. It was kind of flat. But what are you seeing now?
Yes, I mean, so first of all, what I started doing because of this sort of a small, I don't want to call it a shift because people,
Yeah.
tend to
Yes.
equate that with the markets changing, but I'm seeing something worth looking at. So I switched, let's just see, about a month ago to instead of pulling these numbers weekly, now I'm looking at them daily. So I started charting these numbers daily, and
Yeah.
you can see over the last 3 to 4 weeks how for a while, every single week, we were getting deeper and deeper into the number of pendings out of what's on the market. So that number was getting higher and higher every single week, meaning that we were absorbing the inventory at such a quick pace. Now we're starting to see that it's flattened out. Actually, even slid back a little bit over the last couple of weeks. So that's the one thing that I'm seeing right now that's really got me paying attention to these numbers every single day, because I want to know the moment that we feel like, okay, now we're starting to see a trend, 3, 4, 5, 6 weeks in a row of it declining, that could be the beginning of inventory starting to build in the market. And that's what I'm looking for. I'm looking for, when is inventory going to start building?
Yeah.
So right now, when you look at single family homes across the board, 73.79% of every home that's on the market is under contract. So that number is still a very strong number.
Yes.
There's no question. But we were what, 75% a couple of weeks ago.
Mm-hmm.
So now it's 73.9. Not a big deal. Not a big deal, but it is a big deal that it's not going from 75 to 76 to 77. We're actually sliding back a little bit.
Yeah. So just to make sure, like, and I want you to kind of confirm or correct this statement. What this really means is, if there were 100 properties for sale in the MLS, 73.79, let's call it 74 out of the 100 would be under contract. So it'd be no longer available for a new buyer. That's right, correct?
That's correct. That's exactly what that is. Yeah.
Okay. So then out of 100, then there would only be, instead of 74, then that would be 26 out of 100 properties would be available for showings and be available for someone to make an offer on and potentially be able to buy that home because it's not under contract, right?
That's spot on. So if you actually look at the screen as well, you'll see there's actually 4,243 homes on the market right now. So that's the exact number. And out of those, 3,131 are under contract. So when you're on Zillow or Trulia or Realtor.com or our website looking at property, and you're seeing all these properties, and you're wondering, man, why are all of these under contract? This is why. 74% of them are actually under contract. So you're flipping through, trying to find that 1,100 properties that are there.
Yeah. We've had buyers say that. So I don't know why that, it's like all these listings, they're all under contract. I just want to see the ones that are not under contract. It's like, unfortunately, there's not many.
Yeah.
That's kind of been the conversation, that comes with this stat.
Yeah. So that's exactly what the numbers are, Greg. And again, we're looking for any changes that we can pinpoint before all of a sudden 6 months later we realize, oh, we're back to a seller's market.
Yeah.
A buyer's market. Right now it's still extreme seller's market.
Yes.
In this market, inventory is still less than 1 month's supply. So let's look at the resales, right? Because this number is going to be more relevant to you consumers out there, because these are existing homes that people own. That number is 65.46%. So that number, just to give you an idea, back on April 21st, that number was 69.78%.
60 what?
69.78. So almost 70%. So that's pretty significant, right? So when
that's
week after
significant, that's a significant change. Yeah.
Week after week, that number kept going up and going up. It went from 60 to 63 to 66 to 66.5 to 69. And then it started going down since April 21st. So it peaked at April 21st. And now it's been going down week after week. So what that means now is there's actually, as a percentage of what's on the market for single family home resales, there's more available for buyers than there was on April 21st.
And so one of the things that I said before is the buyers, now they're becoming a little bit more cautious. But what's interesting, Abe, is at the same time that I'm saying they're becoming more cautious, you're showing that they have a little bit more options. Now we're not talking. Now Abe and I are really showing you numbers in real time based on a weekly basis. So, it may not be a tremendous increase in options. These are small little changes, but the key is they are sensing they have a few more options. So if when they start to sense that they have a few more options, they'll be a little bit reluctant at just giving, just doing anything to win a property in a multiple bid situation. So these things are really going hand to hand. Here's the data. And the data, that's why we look at this data, because a lot of times we can kind of see what the future conversations are going to be with buyers and sellers, knowing what direction the data is going in. It's very, very predictable.
No question. And you and I have been doing this a while. You've been doing it much longer. I mean, you've been in this business for a very, very long time. So you've got your gut instinct. So you can kind of sense, hey, the market is starting to look a little different. It's feeling different. Then we back it up because we do a lot of business in this market. We also back it up with our own experiences with those sales. But then when you match it up with hard numbers like this, then it kind of puts the pieces together for us and gives us a really clear picture of what's happening in the market.
Yeah.
Yeah. So let me switch over to new construction real quick. So this one is still very strong, right? New construction homes, all 82% roughly of every new construction home on the market is under contract. Again, that's a lot. Take into account if we took out the to be built, if we took out the ones that aren't actually available for people to buy, then that number is even significantly higher. So that area still is very strong. Let me see what it was back in yeah, it's that one is still continuing strong. We haven't seen the decrease on that one that we've seen in the resale market.
Yeah, and another thing with the new construction, they're still battling with the volatile supply prices of supply of lumber and labor, and especially lumber and other supplies. The prices are bouncing up and down so much that's coming into play on how aggressive they're being at just building standing inventory.
That's a very good point, Greg. You just made me think of something. So that can also be, so the resale homes, that number could be is dropping because homes are actually closing. Right. So if we had so much that were pending and then homes are closing on time, that number's going down. Now with the new construction, there's a lot of delays out there. So if there's a delay, now we're getting a bottleneck of closings, right? They're not closing at as quick of a pace as the resale home. So that could be the difference right there.
Mm-hmm.
Because I can't imagine that there's still a bunch of more demand for new construction than there is for resales. I think that could be the issue. With new construction.
Got it.
So condo market, overall condo market, 67.73 of all percent of all condos on the market are under contract. That number, it's kind of been bouncing back and forth. So back on April, let's see, May 11th is when it peaked at 68%, 68.2%. And then it dropped to 67 to 66, back up to 67. It's kind of fluctuating back and forth somewhere in the range of 67 to 68%. Mm-hmm. So that's still relatively strong on the condo side.
Yeah.
Let's see what the oceanfront looks like. Oceanfront.
Wow.
Yeah, not many options for oceanfront condos right now.
No, I mean, I just listed one yesterday. It should be going on to the MLS today in Baywatch. And I've been selling units in Baywatch for years and years and years. And I have the only 1-bedroom oceanfront on the market in that building.
Yeah.
And it's like, wow.
There's usually a ton. Yeah.
Yeah. I mean, I've seen where there's probably been 25. Or 20 to 25 and only one. And so it's highly likely that we're going to get it sold. And yes, I did push the price a little bit because there's only one. So, Abe and I are definitely looking at not only what the last sales are, but we're looking at competition. If we see that we're getting ready to put a property on the market and there's no other ones, then we may not necessarily price it based on the last closed sale. We may price it based on what we anticipate the next closed sale being. And that's how we continue to improve prices in an individual building. We're kind of pushing the limits, but not going so far that it just sits there. you know.
Yeah, I just took a listing at the Myrtle Beach Resort, and we priced it at 145. I've been talking to this seller for 2 years, and I looked at my notes.
Oh gosh.
Back in March, he was looking to put it on the market, and we were talking about 130, 132. Today, we're going on the market at 145.
Yeah,
So,
and it's going to sell.
Yeah, because there's only one unit in the whole building, and it's on the first floor. This guy's on the fifth floor. So, again, you and I are not only looking in the rearview mirror at what has sold and how much is sold for. We're looking, okay, there's one unit in the building. We know how much demand is out there. We could let's squeeze out a few more $1,000 for this seller, and you can do that. You can do that right now. So just FYI, the peak on those condos was like 53.8%.
So it's relatively the same right now.
Yeah, relatively the same to what it's been a few weeks ago when it was peaking. This one here is huge. So, I started separating the condos that are not on the oceanfront. So this is all the condos not on the oceanfront. So these are golf course condos, waterway condos potentially, on the marsh or whatever it be, anything that's not on the oceanfront. And almost 79% of all of those are under contract. So definitely seems to be more demand for those units.
Somebody asked me the other day, and again, I don't pretend to have a crystal ball, but somebody asked me, like, what do I think about the condo market? And I said, people who are buying for cash flow on the oceanfront, a lot of times that is a more volatile market. So when there's shifts, there could be bigger swings. But the non-oceanfront market, a lot of the demand for these condos, and townhomes would also be in the category of condos. A lot of the demand for this category is fueled by people that are being priced out of single family homes, and they're having to buy a town or a condo. They don't want to be in the resort properties oceanfront. They want to be kind of off the beaten path. But so it's not like these are not the same type of buyers as the oceanfront. Right. These are people that are buying for true second homes, or they're actually buying to occupy them. And so that tends to, when somebody's buying for second home or for primary occupancy, that's going to be, you're going to see less volatility in that product type. So like if there was a shift in the future, would probably see this market still maintain a fairly high level for a longer period of time than maybe a resort-like property.
That's exactly correct, Greg. Yeah, a lot of people are buying these as a primary residence.
Yeah,
they don't want to be in the resort ones on the oceanfront. Number one, the traffic. Number two, the HOA dues are so high there. So you buy a townhome on a golf course, your HOA dues are going to be $300 roughly, as opposed to $800-900 on the oceanfront, and then you can actually live there. So that's what's happening now. There's only 249 units available, and this is the entire market. So this is all the way down to Pawleys Island, all the way up to Cherry Grove, Little River area, all the way into Conway. This is the entire market, 249 rough, if I could do math quickly, 249 units available for sale. Now, we've seen some really good appreciation in these types of condos. Really good. Like an Ironwood, Barefoot Resort, Ironwood unit, 184.9 hit the market the other day for a 2-bedroom. Got multiple offers so quickly. 184.9. These are 140 like 3 months ago.
Yeah, incredible.
So great appreciation there if you have a condo that's off the oceanfront. And let's look at land real quick. 21.68% of all land out there is under contract. Now this number, like the resale homes, has dropped significantly. So they peaked at 26%. Back in early May. So we went from 26%, now we're down to 21.68% on land. So, I agree with you. I think if this market does eventually soften up, or when it does soften up eventually, I think we're going to feel it on the land. I think we're going to feel it on the oceanfront condos before we feel it on single family homes and oceanfront condos. Yeah,
I agree. I agree. Well, good.
That's all the numbers.
All right. Well, that's great. Well, so I mean, one thing that we know for sure is the market could soften, but we see no reasons that the market would crash. So, I mean, this is totally different than what we were experiencing back in 2006, 7, 8, 9, 10, and all all that period of time. So I always want to reiterate that, in that markets move. Real estate prices fluctuate pretty much weekly or monthly. Stocks fluctuate by the second, right? It's like every second it seems like that stock price goes up or down. Real estate doesn't go that fast, but real estate does fluctuate faster than what a lot of people probably understand, because they don't have the access to see the data in real time at all times. It's not like you just go and look at the ticker, and see your stock going up and down all the time. With real estate, you don't see it. It's not in front of your face all the time, so you don't see the volatility. That's something that Abe and I study quite a bit. But for the most part, if there is a shift, it takes a while. And what I'm hoping all of you will do is you will listen to this information, you'll absorb it, you'll understand it, you'll give us a call and let us share more with you. And then that can help you make good financial decisions, again, around your real estate holdings. So if you need anything, any information, you don't have to call us just because you want to sell your property. You can call us just because you'd like an update on the value of your property. Here's our cell numbers right here. Text us, call us, and we'll be there to help. Abe, thanks again for that information.
Enjoy it, Greg. See you next week.
Take care.